Hello, viewers. Welcome to my channel, Sensor 360 Investor. Let's take a quick look at markets. I haven't done an update for a few weeks since we've been in a short-term rally mode, but they do look interesting, and we may be near inflection points. So, wanted to um, touch base and take a quick look. Okay, so within our 360-degree framework, we're going to concentrate on the markets segment today. And slightly off topic in terms of the order of our usual program, because I do want to introduce one new idea to you, new here, but not new in the markets. Okay, so before we begin, quick word about the disclaimer. Channel's not providing financial advice. Please pause, read through this, and then continue. Thank you. Okay, so without much further ado, let's begin the show. So I want to introduce this chart to you today, and it's well-known chart. You can pull it down from Google. It basically describes what the psychology of the markets will look like over a full cycle, bull bear cycle. And so it helps us to kind of give us some kind of orientation, a map as to figure out where we may be on this pattern. So we'll come back to this later. So let's take a quick look at the US markets. Here I've given a 1-year view, and we can see how the markets are actually on a yearly basis, come back quite a bit from the lows. And most of the lows were put in October last year, and we can see how um, the Dow Jones is the strongest. It's hardly down at all at this stage, and followed by the S&P 500, which is moved quite a bit off its lows when it was down about 19%. Now it's only down a fraction of that. And then we have the Nasdaq that's also come off its low. So we can see that we have definitely had a long bounce. And so what I want you to observe is, let's say the S&P, for example. So off the so we've come down off the peaks, and as usual, it's like a 1-3 pattern. But here we make a low, and then we start to make a higher low, higher high, higher low. Now we're on the way to testing this prior high. Yeah, and if this pattern continues, it definitely looks like we are in a new uh, bull market, and this is a new uptrend. And the technicals are also showing that as well. So let's test that a little bit later on. And if we look at the S&P spider sectors, this one's over a 6-month time frame. In descending order of strength, here we can see the healthcare is the best performing stock, again off the lows, quite the bounce. XLC, communication services, and so both of these are still beating the index itself. All the rest of the sectors are underperforming the index, which kind of makes you think that if that's the case over 1-year time frame, then how broad is the participation in this move up from the October lows? So definitely we want to question that and take a deeper look at that. And then if we look at the mega caps, because these are the ones that really make up majority of the index, and certainly can move the index as they move. And so in here we can see that the old Facebook, now Meta, bottomed earlier and has been pretty much in a strong uptrend. It's pretty much doubled, more than doubled from its lows. Johnson Johnson is now starting to move up after settling its lawsuit on the baby talcum powder. Visa's also made a strong move, and we can see over a year, Visa really has just been a strong stock, hasn't hardly corrected like some of these others. Google's been whipsawing, but we can see it's quite a bit off lows. ExxonMobil Energy's been performing quite well, but Apple, which is almost a value store of value, UNHS moved up, Walmart, Microsoft, along with Apple, seems to be where the money's been migrating to. And then since AI hit the markets, Nvidia's had quite a strong move as well. Tesla's had a significant bounce as well. you can easily make 78% from the lows there. So definitely the mega caps they have participated from the beginning of this year. Some of it may have been short covering to start with, but it's then followed through pretty handsomely. Okay, so if we look a bit more of a drill down, if we look at the S&P 500 and which stocks have made, say, 25% or more upside move, so these are the ones, and there are 28 out of 503 stocks in the index have made a move so far, 25% or more. We can see Meta up at 84 from the beginning of the year, Nvidia closely behind at 83. On the flip side, we can see that the same, so I just took the same 28 number to the lowest 28. We can see over here that this is the worst performing stock here. FRC, yeah, okay, First Republican Bank. Quite a number of financials, so these have kind of dropped, obviously because of Silicon Valley Bank in the recent crisis. A lot of banks showing up here, so financial services all over this map. And then if we look at stocks, the number of stocks in the index that actually have beaten the benchmark index, only 152 out of 503 stocks are beating the benchmark. So that means there's roughly 70% or whatever that is are not participating. So this rally is a lot thinner than it looks. Okay, so let's take a look at the Nasdaq. This is a weekly chart of the Nasdaq. I just want to show. So here we have the COVID lows, and the bull move there, and then off the peaks, we've kind of made this 1, 2, 3. So 1, 2, 3 move down, and off the lows here, try to come back up, but we did an undercut. So we've got move down to here, and then from here we've started to work our way back up. So this is definitely looking like a fresh uptrend. So if we then look at where we might be in the map, so off the highs, we come down, and you can see it's not straight down. This chart's a little compressed, but there are moves back up through from the lows back up, and then undercuts this low. This is the summer low. This is the October low in our current map, and then from there we can see here starts to make a move up, and it looks like that we're forming a new uptrend. And on this map, this phase is known as complacency. And so let's have a look at the S&P 500. So again, we can see off the highs, come down, make a low, undercut that low, and then from the undercut, we've been making a nice steady high low pattern, and we're looking to test this recent high as well. So here's the move down. Here's the trend moving back up, and technically everything looks hunky dory. So where could this finish up? So the first area we're looking at is around the 43 mark to the upside. So that's where we may find a zone of resistance, and that this prior swing high up here is about 43.73. So those are the two zones we want to look at to see if that's where the market turns or continues to go through. And then on the low side, if we get pushed down from these highs, then where can we expect resistance? Definitely there's resistance along the way at several levels on these averages, but the key area to look at would be 3,400, and that would result in from 43 down to 3,400, about a 22% drop in the markets. Would that be it? So if we go back to this chart, that suggests that would only be the beginnings of this down move. And from a business cycle perspective, we haven't seen classic late cycle stock market moves yet. So one of the keys to watch out for will be earnings recession. And since we just kicked off earnings last week, so we definitely want to be watching the earnings, and in particular the earnings forecasts for next year. Okay, so that's a quick update on markets and where we are at, where we may be going, and potentially how we line up with the psychology of the market cycle and where we are in that space. So that's it for this video. Thank you for watching. Thank you for listening. I will see you in the next video. Goodbye.